All right. Hello, my name is Nathan with UnitConnect, and I'm here with Albert, who's one of the co-founders of UnitConnect. And in this video, we're going to be covering CAM reconciliation, why it's important, and how to facilitate that process while leveraging UnitConnect software. So a little bit of background information about Albert. He's one of the co-founders, and in addition, he runs and manages his own property management business out of New York, working with both commercial and residential properties. So Albert, if you want to take it away, go ahead.
Sure. Thanks for the introduction, Nathan. Much appreciated. So I guess the purpose of this meeting, is, as you said, is to talk about CAM reconciliation, why it's important, and how do we leverage UnitConnect to perform CAM reconciliation. So just before we get there, I want to make sure that everybody understands what CAM reconciliation means. All right. So if you own commercial property or any property, either maybe single tenant or multi-tenant, that where you're responsible to maintain common areas. And what that means is, you have a property with a parking lot, for example, and you have to maintain the parking lot, you have to sweep it, you have to perform snow removal, trash removal, and so on. Those tasks are considered common area maintenance, right? Maintaining the common areas. So again, in the commercial lease, typically the landlord is responsible for maintaining the parking lot. Again, in a typical multi-tenant lease scenario, the landlord is responsible for maintaining the parking lot, and the tenant shall typically reimburses the landlord. Right. So, and again, in the multi-tenant scenario, that's usually the case. In a single tenant scenario, there are cases where the tenant maintains the common areas, and landlord has nothing to do with it. But there are some cases where the landlord maintains it and tenant reimburses him or her, the tenant. The tenant reimburses the landlord for the maintenance of the common areas. So that's, again, in a nutshell, that's the definition of common area maintenance, right?
And Albert, a quick question. Is it true that generally, when determining who is responsible for the CAM or for the common area, is that generally specified within the lease?
It always is specified in the lease.
Okay.
Again, the leases can get so complex where, it would actually list out what the responsibilities of each parties are.
Okay.
So you could say, okay, the landlord is responsible for X, Y, and Z. However, if it exceeds a certain amount, then the tenant is not responsible for, over that specific amount. Or it could
Yeah.
say that, a tenant is responsible X and Y, but not Z. For example, I'll give an example where, the tenant is responsible for, the lease may list things such as landscaping, porter service, cleaning, snow removal, but not management fees, right? Some landlords may say, okay, management fees is part of common area because they typically hire a management company to perform those tasks. And reimbursement for the management fees should be also the responsibility of a tenant. So again, those are all typically are in the lease, and is all based on, how the lease is negotiated. There's no hard and set rule that says, okay, you know what, all these items are a must. It's always up to negotiation.
Okay.
The limits, the items that are included in the common area are all part of the lease, and
Awesome. Okay.
and could be negotiated.
Great. So then, what would be the next step, or how would you begin that process after signing the lease, and maybe starting to look at how to configure things within UnitConnect? What's the first step?
So I guess even before we get there, right? I just want to again take another step back and say, right, in typical triple net leases, or in typical leases where there is CAM reconciliation. What CAM reconciliation also means is that the lease sometimes may require the landlord to send a reconciliation statement to the tenant, right? So at the beginning of the year, or typically the landlord would put together a budget, right? The landlord would say, okay, it will take me, it would cost me $200,000, for example, to maintain the shopping center, and that $200,000 includes all the all the items, landscaping, snow removal, and so on,
Mm-hmm.
right? Now, when we get to the end of the year, it could be that the landlord spent more or less, all right? So that process of reconciling the actuals versus the budgeted amount is called the reconciliation, right? So the CAM is reconciled, and then at the beginning of the following year, the tenant would receive a reconciliation report and make up for the difference. Either the tenant would make up for the difference, or the landlord would send them the credit.
And just to clarify that, so the instance where the tenant would need to pay back the landlord is if the expenses have exceeded what the tenant has already paid. Is that correct?
That's correct.
And or vice versa. Maybe there's some instances where the tenant has paid more than what the charges for the year were, and so the
The landlord.
in that instance, the landlord has to pay the tenant back the
That is correct.
difference.
That is correct.
Okay.
So
Okay.
again, so what I could do is let me share my screen, and what we'll do is we'll just run through an example in Excel
Mm-hmm.
quickly, and so this way we can highlight what it would look like in real life scenario. So
Okay.
let me share my screen. So let's assume we have a shopping center with 3 tenants. We have a coffee shop, pizza store, and an urgent care office. Right. This is what the size of each store is. Now, based on the size, this is what the pro rata share of the store is. Right. The pro rata share is basically the percentage share of the entire shopping center. So in this case, if an urgent care office is 2,500 square feet, that means they own 52 or occupy 52.08% of the shopping center. And again, this percentage is typically indicated on the lease. Sometimes it actually defines the percentage, or sometimes it just says pro rata share. But it's basically the size of the store divided by the total area. All right, so this is a pro rata share is an important factor in CAM in determining what the CAM amount is. So as I was saying before, at the beginning of the year, typically landlords or ownership puts together a budget, or management put together a budget estimate of what it would cost to maintain and operate the shopping center. So in our scenario, these are the assumptions that we've made, right? So that these would be the cost for each of the items, totaling 17,500 for the year.
Mm-hmm.
Now, given each tenant's pro rata share, this is what each tenant would be responsible for. Essentially, this is 17,500 multiplied by 22.92% for the coffee shop, and so on for the other stores. Again, dividing it by the pro rata share and summing them all up equals to the same amount, 17,500. So typically, the management companies or the landlords would bill the tenants on a monthly basis. So each of these tenants would pay an equal monthly amount, and at the end of the year, it would sum up to this amount.
So they would take that, whatever it's budgeted, and you divide that by 12. Is that correct? For each
That's
of
correct.
those items? Okay.
That's
And
correct.
then the tenant would get invoiced that amount.
That's correct.
Okay.
As I've said before, the year goes on. At the end of the year, you conclude, you close your books and you conclude that you've actually spent a little bit more money, right? So if you look at, the actual expenses. So in this example, we have the actual expenses. I mean, we've made it look more or less like actual, and you've spent $18,422.56.
Mm-hmm.
Right. So if we look into this particular column, right, and multiply this total amount by everyone's share, this is what it comes out to. All right.
Yeah.
And obviously in this example, each tenant paid less than what they actually were supposed to pay.
Right.
Right. So that's how we come into the CAM reconciliation process. Is we've compared the budgeted, what we've collected from each tenant based on the budget, and what the actual expenditure was.
Yeah.
And we've come up to, it's basically this number minus this number. And we come up to that each tenant owes this amount. totaling $922.56.
Got it.
Make sense?
Yep. So then after you've performed this, you would generate a CAM reconciliation report, which would show all these numbers.
Correct.
And so then you would send that to each tenant along with their invoice, so they have a clear understanding of why it is that they're paying that amount.
Correct.
Okay.
So let me go into now UnitConnect, the system, and how we actually put all of this together, right? Because it's really important, for the reconciliation to work correctly. Obviously, data and data entry, inputting the payments, inputting all the expenses is very, very important.
Yeah.
If you want the report to be accurate, you got to have all the data there, right? Otherwise, it just doesn't work. So let me head over to UnitConnect. So I'll head over to this sample property that we have. I'm gonna go into this particular tenant, rent a center, head on to rent details. So this particular page shows the definition of this tenant's lease, right? So in this example, the tenant's provider share is 4.76%. They're responsible for tax, CAM, and insurance. I know that we only covered CAM reconciliation. That's just this particular item. Tax and insurance we can cover in later videos. But there are different ways of also calculating taxes and insurance, although much more simpler than CAM, in my opinion. And in here, this particular line item shows that they're basically contributing $405.27 per month towards their common area maintenance. So if I head over to my invoices tab, click on rent a center, right? So these are my monthly invoices. So we're in September 2022. They're paying, this is their rent, taxes, insurance, and CAM, $405.27. Okay, so if we look at this particular column here, right? So this is what we're actually collecting on a monthly basis based on the budget. Now, if we head on over to expenses, property expenses. So the property expenses page is where we actually book expenses, right? So this is where we put in an expense and it's categorized. So here, for example, Green Mountain Energy is utilities electric, and we would book the expense. Again, every single expense here is categorized. And again, this would be important, and this would be an input into our actual expenses and what we actually spending for the year, right?
Okay.
So now I'm going to head over to the reconciliation. So I'm actually going to run to the reconciliation page. 1 second. So now we're in the property budget reconciliation tab. So this particular tab shows all of our tenants and categorizes tax, CAM, and insurance as it relates to the tenant's share of tax and the tenant's share and the tenant's contribution towards tax. And it compares both of these numbers and shows the balance for each of the categories.
And the contribution is escrow, is that correct?
Contribution is escrow, right? So,
Okay.
so if you think about it, right, as you collect monies from a tenant, again, as I've shown in the previous screen, you're collecting rent, CAM, tax, insurance. Because of the fact that you're doing reconciliation of CAM, you're escrowing the funds, right? You're escrowing because there is a potential that you may have to reimburse some of the funds back to the tenant. So that's why we call it escrow, right? And again, it's very similar for tax, CAM, for tax and insurance as well, because again, some properties you may collect in advance, anticipating what the tax amount would be for the year. So if you collect taxes in advance, again, when you're collecting in advance, it's kind of considered as escrow.
Okay.
Right. So I'm going to run the report. Again, just simply click report, and that's going to generate a report which does all the comparison that we basically did in this spreadsheet, right? And this report will be specific to this tenant. If I want to reports, the report for the entire property or for multiple tenants, I could just select multiple tenants and see that report. So I'm going to open the report for this specific tenant and zoom in. So on top we have the summary, right? Landlord, tenant, the address, total size, the square footage of the space, their product share. And now we list the common area expenses. Now these are the actual common area expenses, right? Because remember, we're running this after the year has passed. And again, this shows the year that we're running this for. So these are the actual expenses, right? Management fees, security, sweeping, landscaping, water, and electric, totaling up to 109,000 for the year.
Okay.
This report also reconciles taxes and insurance. I know we said in the past that we can, we can go in depth in other videos, but it basically does the same thing. It basically shows how much we've spent on taxes, and also if we do litigate or we have tax attorneys, for example, in this case, and also categorize this under taxes, and total tax expenditure was 216,000. Insurance, total insurance was 29,000.
All
Right,
right.
so this is all clear, right?
Yeah.
On the bottom here, we show again, we group by common area, tax, and insurance, whether or not the tenant is responsible, and what their responsibility is, what their base year amount is. Again, this is a triple net lease, so it's a simple pro rata share, and it shows based on the actuals, what the tenant annual share is for each of the categories, and how much was escrowed. And again, escrow is what was collected for the whole year, and balance, right? So a positive balance means that the tenant owes money, right? We didn't collect enough.
Okay.
Again, same thing for taxes. So in this case, the landlord over collected on taxes, so should have collected 10,000 and instead collected 11,425. So there's a credit of 1128. And with insurance, the tenant owes $40.61, and then it sums it all up. In this particular case, the landlord owes $719 to the tenant.
Got it. Okay.
So this is the report that we would typically, the landlord would typically send out to the tenant, and this report we call the CAM reconciliation report.
Okay.
Any questions?
Can you cover a little bit about the entering of the data, for the budget at the start of the year, on what that looks like?
Sure. So again, if we go back, hop back to the spreadsheet here, the budget is here, is this, and typically it's done at the beginning of the year, correct? So setting up the property budget would be on the property budget page and tab right here. So if we want to create a budget for 2023, for example, we would go here, click create new budget. We can copy budget from a previous year, or we can create new budget by selection. So again, if you're operating the particular property, for multiple years, typically, things don't change much. Obviously, same type of categories would still be there, except adjusted slightly for inflation or increases in prices. So, very common, you would copy budget from prior year, you would click this, and we would just update the numbers, what we think the expenses are going to look like in the following year, and we'll just click save.
And how do you handle if there is an account or a chart of account that you want to add that's not already in the existing list?
Yeah, so you would basically add a category right here.
Okay.
Once the budget is created, you can select one or more categories to add.
Okay. All right, excellent. And so once you've created that budget, what's the next step?
So once you created the budget, you would head on over to tenant charges. And this particular screen would help you allocate or help you create, determine what the monthly escrow for each tenant should be. So again, if we're in Rent-A-Center, for example, so this number, this screen shows what the tenant should be paying based on the budget, and the tenant and what the tenant is paying based on what we see in the tenant rent details page, right? So if we head on over to the tenant rent details page, for example, if you look at taxes, so in this case, the tenant is paying $952.12 in real estate taxes. So that's 952.12 times 12, that's 11,425.44. So this is what the screen shows, that our budget for taxes is 165,000 for the year. 165 times the tenants per rata shares, 4.76%, 78.54. So based on the budget, the tenant should be paying 78.54, but he is paying 11,425. Right. So in this screen, you can change this number based on what the budget is. Right. And the same thing for CAM and insurance. Typically, again, given the reconciliation process and the fact that you may have to bill the tenant extra money or additional money, we would leave a little bit of a buffer room. So if just to make sure that we don't bill the tenant extra at the end of the year, because it may be difficult to collect or bill extra, I'd rather give credits to tenants as opposed to bill them extra. So again, I mean, each landlord or property manager may have a different take on it, but my preference is to just have a little bit of a gap. So if I'm budgeting, for example, 7,854 for taxes, I'll probably go with 8,000 for the year. For CAM, I would go to 5,200, for example, right?
Okay.
So that's what I would set it to. And then once I click save, my charges here on this particular table would be automatically updated, and that's what that's what the monthly escrow would look like for each tenant.
And do you have to do anything in UnitConnect to add them in the first place, or is it once you've created a budget and added the expenses for each of the categories, then UnitConnect will automatically add that for each tenant?
Right. So once you create the budget, you'd see this page would automatically be populated for all the tenants.
Okay.
So just head on over here. First of all, you have to create the budget, head on over here. This will all automatically populate. You'll review this, adjust any numbers, and then just click save. It would automatically populate all of these charges on a monthly basis, or a monthly or annual. I mean, in this case, again, based on the lease, some tenants would have it as monthly, would want to be billed as monthly, and some annually. So in this case, this tenant wants the taxes to be billed annually. So we would have yearly here as opposed to monthly.
And if it is billed yearly, what month of the year does that bill show up on the invoice?
Typically, it would be based on, it would be the rent commencement date. It would use the rent commencement date, so the rent start date, the month of that. That's what it would use to begin with. But obviously, this is not set in stone. Just like in our example, right? It's set for January, so every year in January.
Okay.
You can go ahead, and if you need to modify it, you can go ahead and modify the date here.
Okay.
And it will bill every January instead.
Okay. All right, great. And then, yeah, if you could go back to the CAM page.
Yeah.
Okay, so we've changed all that. We saved it, and then the reconciliation page is at the end of the year when you want to generate a report.
Correct.
Now we can see that the balance due column is editable. What would be a reason that we would want to change that balance due?
Again, some instances where the landlord decides to give them a credit for whatever reason. If there's a balance due, they want to make it 0. I mean, that's why we allow it. We're allowed to change it in the event the landlord wants to change it.
So if you change the balance due and then click apply changes, that will be reflected in the CAM reconciliation report. Is that correct?
Correct.
Okay.
You want to, there's a reset button. If you want to change your mind later on, reset it, you can reset it.
Okay, great. Awesome. Albert, is there anything else that you wanted to cover?
Yeah, so what I wanted to cover is just, again, a couple of other things. So one other thing, I know in the beginning we said that, you know, the leases may be complex in terms of what's included and what's excluded with CAM. So we've built CAM configuration or configure CAM option. So as I've said before, if you notice, for example, here we're billing the tenant for everything, right? So let's say, for example, this tenant in the lease, it says that the tenant is responsible to reimburse the landlord for all of the common area, with the exception of management fees, right? So if we want to implement that into the report, what we would do is we'd go over to rent details, configure CAM, and choose management fees here. And then as a percentage would go 0% save.
Okay.
If I run the report again, pull up the report, you notice that we have a deduction of $12,000 against all CAM.
Okay.
So now the landlord owes $1,290.57 to the tenant as opposed to $719, right? Again, there's other things that we can configure as well. We can add, let's say, you know, again, and this is also very common, capital improvements of this category for capital improvements, not to exceed $10,000. So we're kind of setting a cap of what the tenant would reimburse for.
Okay.
That's it. Any questions?
No, I think that that was great. So thank you for going over that. And for anyone watching, if you have any additional questions, you can reach out to support@unitconnect.com, and we'd be more than happy to help you go through this process or answer any questions you have. And we'll be sure to follow up with some additional videos with some additional content around what we've covered, as well as other features of UnitConnect. So thank you so much.